Well, I think it's the same way with options. So learning the stock market, learning how stocks work, learning what stocks are, understanding what that underlying thing is that you're trading, then moving to options, I think is a great step. Options are smart. They're really great for people who really want to hedge their risk and who don't have a huge amount of money to begin with. So options can be wonderful. But again, I think just going in the proper door, learning the stock market, learning how stocks work, even trading stocks first, just to get the idea, then moving into options.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at aistocktradingsystem.com. That's aistocktradingsystem.com. Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021, so you can get access to right now at OVTLYR.com. That's OVTLYR.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks Options podcast. Today, we have a special guest online, Jerry Robinson from Follow the Money Radio podcast and followthemoney.com. Jerry is an economist, a veteran trader, best-selling author, investor, public speaker, and trading coach. Jerry, I am excited to have you on the line today. Thanks so much for coming on.
Oh, it's really great to be here. Thanks for the invite.
You know, this is pretty cool. I asked my assistants, I was like, go out and find me some of the best podcast hosts that you can so we can interview them on the podcast. And you were absolutely on the top of the list. So thanks for being available.
Of course.
So tell me about you. Tell me about how Jerry Robinson came to be the man that he is, and your business and everything else that you've got going on.
Sure. Well, I cut my teeth on the stock market back whenever my mother was learning, or she was actually studying for her Series 7. I was pretty young and I was helping her study for the Series 7, kind of cramming for that. It was a pretty tough test. And I really was kind of enamored with the stock market and Wall Street, really had an affinity for statistics early on. I remember used to watch baseball games when I was a child, and I would keep track of all the RBIs and all the home runs and the statistics and the batting averages. I was just really drawn, and even weather, I would, plot out weather charts, kind of geeky, but I was really always attracted to numbers and charts and things like that. So trading made a lot of sense to me, and investing and using charts. And so I really spent a lot of time learning about some of the greatest traders and investors of the past. That's really what I spent a lot of time doing. Jesse Livermore, Templeton, Sir John Templeton, and many others, guys like William J. O'Neill, Gerald Loeb. And so I spent a lot of time studying the greats and realized what they focused upon was price, volume, time. These things that are in common with every asset as long as you can plot them on a chart, you can begin to interpret that data. And so that's really kind of what drew me to the market, was the fact that I had a kind of an affinity for statistics and for numbers and really like to look at charts all the time. So I really gravitated towards that. So by the late 90s, 1996, 1997, I was in corporate America, had one of my really big first jobs, in corporate America. And I found out I didn't like it too much. And so I began looking for an escape from corporate America in the late 90s. And I had a friend who was working with me at the time who was day trading. And this was, of course, the late 90s. So keep that in mind. We're kind of in the dot-com boom, getting ready to move into that dot-com boom, 96, 97. And he taught me a few things, learned from a buddy. And he just showed me what he was doing. I began to dig a little deeper into that. I started digging deep into my studies of traders and started trading back in the late 90s with a small account, and did well some days, did bad some days. It was a wild time back in the dot-com bubble. After the dot-com bubble burst, I began examining options, and I traded my first option in 2002, and became a financial advisor after that for a period of time. And then I wrote a book in 2007 because I saw what was going on in the economy, and I wrote a book called Bankruptcy of Our Nation. It finally got picked up by a publisher in 2008. And once that book came out, it just hit at the right time, I think. And it created a pretty big splash to where I was able to really focus upon education. We had so many people contact. I went ahead and hung up my financial advisor career and focused upon education. And I really just focused upon education. And I created followthemoney.com to teach people how to be good financial stewards, how to break free financially, shared with folks what I had done, and also really created a system on trading, just really hunkered down and just created great resources and tools for people who had the same kind of desires that I had. And that's what followthemoney.com is. So when you become a member there, there's a ton of free stuff on the front end. But when you become a member and you get beyond the paywall, it's like an iceberg. I mean, there's tremendous amount of stuff that you just don't see on the front end. And it's, all kinds of education on trading stocks, trading options, trading cryptocurrencies, all kinds of information about the economy and trends. So income, we have an income university where we teach people how they can create 22 different income streams in now and in retirement. So we really focus upon educating people, helping them break free financially. And that's really where we are now. I traded my first, by the way, we had mentioned before we came on the air, I had bought my very first cryptocurrency in 2012. So I bought my first stock in 96, bought my first option in 2002. I bought my first cryptocurrency in 2012. And the cryptocurrency has also been a really interesting space. I really enjoy that space a lot. But that's where we are. So today we have members all over the world. We're so blessed to have a great community, an online investing community at followthemoney.com. And I love serving our folks here. So
gotcha. Well, that's a pretty amazing story. So what you're telling me about day trading in the 90s, my first thought is there's no internet, there's no online charts, there's no E-Trade that you could, whatever platform that you could work on. How did you do this? Literally, how could you do that?
Well, no, actually there was in 96. Actually, I believe I was using E-Trade. I know I was using Scottrade. That was a long time ago. Scottrade used to have the real cheap trades. And of course now they're free, but yeah, I used Scottrade. There were online charts during that time. Of course, I'm not that ancient. You would have to go back probably to the 50s. I'm just thinking back
because 96 or so, like I'm 10 years old. I remember my dad getting the computer, but I don't remember it having internet on it. And
yeah, much of it was very rudimentary, but it was still there, Yeah. And no. And it was a wild time trading during that time because I didn't know what I was doing. And I see what I love about teaching individuals to trade is that I see myself in these new traders. I see the desire to want to be successful with trading or to have a success in investing. I see the desire, but so many times we bring in poor habits, poor thinking into this world of trading and investing, and we then it blows up in our face, and then we say it doesn't work. We say, oh, trading doesn't work or investing doesn't work. Well, it does work. It's just that you have to approach it properly and use proper habits. And so I really enjoy, helping new traders. We started a podcast many years ago. You may have heard of it. You may have saw it whenever you researched our stuff, but we did a podcast called the Stock Trading University Podcast, where you teach people to trade in 1 minute a day. And I really wanted to focus upon teaching, new traders, just basic bite-size, lessons where not to be intimidated. And I've seen many people just become intimidated by the process, but if it's something that you want to do, you can achieve it. And I would imagine the majority of your listeners are people who are either aspiring traders and investors, Christopher, or they would be people who are already successful or trying to be successful traders and investors. And, you know, it's a hard thing to do. It's a hard thing to succeed at. But it does take time. And it's like anything else. The more you practice, the more you think about it, the more you spend time focused upon it, you can succeed. And back in the 90s, I wasn't very successful. I mean, it was my, first few years, and nobody can claim to be tremendously successful in their first few years, but you sure do pay your tuition on Wall Street. And I did that for sure. I paid my tuition.
That's so funny you say that, because I am the openest book that I can be to people about all of my trading mistakes and losses and things like that. And I always refer to it as my Wall Street tuition, without a doubt, every time.
That's
so
definitely what it is.
Yep. So, all right. So now you're trading options, or you started trading options. How did that go? Because, give you a little backstory here. When about the first 4 years that I traded, I couldn't make money. Like, I did everything possible wrong to just lose as much as I could. I blew up my account twice in that time. And a lot of it had to do with I'd learned from people that I would not say is the best strategy at all, but it was the sell high implied volatility, naked calls and naked puts, out of the money things. And I'm like, there's never been a time I'm making money. Like, as soon as I put a trade on, it's always losing money. And there was a point in time where I was like, I have learned the wrong way to trade, obviously. So I need to unlearn and then relearn the right way to trade, which that really sucks. And, a lot of people get into this where they're coming like, I've heard the phrase that, when you trade out there and you're making money, who's the person losing money? And a lot of times it's the dentists or the lawyers or people who are really smart in their career and think that translates into being smart in investing, but not necessarily understanding the mental aspect of investing. So what are your thoughts on options and how did you go down that road?
Well, I'm really glad that I learned how to trade stocks. And when I say learn, realize I learned from kind of like your situation. It was just somebody at work, just somebody who he wasn't a professional. He was just trying to make money on the side. And I had spent time reading books and all of this, but, never really any real world experience. So when I began to trade stocks, paid that tuition on Wall Street, got knocked around quite a bit. Made some money, lost some money. But what I realized was how stocks worked. And that's why I'm very adamant when I teach new students that it's okay for them to trade options. And that's fine if they want to make that their specialty. But they really need to understand and grasp the stock market first and understand how to trade a stock first. There's some options traders who've never traded a stock. They've only traded options. And I think that's probably a not a mortal sin, so to speak, but it's something that probably you might want to revisit. I compare it to the guitar. So I learned how to play guitar whenever I was a kid, in my teens. And fortunately, I learned how to play on an acoustic guitar, which is a little more difficult than playing on an electric guitar. When you play on an electric guitar, you can push the strings down and it doesn't hurt your fingers hardly at all. Whereas when you play an acoustic guitar, anybody in the audience who plays guitar, you know this, when you put your fingers on the acoustic guitar and you've never played before, it hurts your fingers. And because I learned how to play on an acoustic guitar, when I moved to the electric guitar, I thought, this is easy. And I was ready. I was primed. I knew how the guitar worked. And by playing the acoustic guitar first, I learned the good habits. And then when I moved to the electric guitar, then all those good habits made it that much better and that much easier to adopt the electric. Well, I think it's the same way with options. So learning the stock market, learning how stocks work, learning what stocks are, understanding what that underlying thing is that you're trading, then moving to options, I think is a great step. Options are smart. They're really great for people who really want to hedge their risk and who don't have a huge amount of money to begin with. So options can be wonderful. But again, I think just going in the proper door, learning the stock market, learning how stocks work, even trading stocks first, just to get the idea, then moving into options. But I really like options. The strategies you were talking about are, pretty risky. What I learned early on was to focus upon high delta, deep in the money calls, which was a really great thing because that turned out to be it actually fit my whole idea of how the market worked. Like I would look for a nice trade, like a position trade, for example, and I would look for a stock that I thought could rise 20% over a period of a couple of months, 2 or 3 or 4 months, as a position trader, maybe even longer. And so then I would just take that same idea to the options market, and I would look for a high delta call that would be out, several months, and I would buy it deep in the money. And of course, that's exactly what you normally don't hear. Most people, they want to buy the very cheapest option ever. They think that's how it works. You buy the cheapest option, and then you make all this money. Well, as you know, and as other people have learned as well, that's not really how it works. And so, I learned that particular strategy, and I learned several different strategies over time, some that worked, some that didn't. But options are so smart. They can be really powerful, and they're a great way to diversify your trading and your investing, even to hedge your own investments even. So I think it's a wonderful skill to learn. I do like options a lot. And we actually have an options trading course on our website, in our store right now. It's on sale. We cover 3 of our favorite strategies, including I go in depth on this one about the high delta, deep in the money stocks. A fantastic strategy that has been really working this year.
That is actually what I have been doing a lot of this year. Generally, I would be selling put spreads behind moving averages. Like I'll go and I'll back test the moving average. Let's say it's like a 20-day exponential moving average. And then, if that provides enough return, then I'll just sell put spreads as that goes up. But this year I changed it up a little bit, and I've been doing the high delta, deep in the money calls. And that's been amazing for me this year. Yeah.
It's my account. Powerful.
Yeah. As of right now, I'm up 68% on the year, and I'm like, I think I figured out something. So I'm going to continue to do that for a little while. So Jerry, how much Dogecoin do you have, or Dogecoin do you have?
Well, it's pretty ironic what the folks seem to be gravitating towards. Dogecoin is about the worst technology and about the worst possible setup for cryptocurrency. It's almost like they're setting it up for crypto in order to make cryptocurrency fail. I mean, everything that's good about Bitcoin is missing from Dogecoin. Just like with Bitcoin, for example, Bitcoin has a finite supply. That's what drew it to me so many years ago when I saw the finite supply and understood the Fed and understood, I wrote a book called Bankruptcy of Our Nation. So I understood, the concept of the debauchery of the money, the fiat currency, the modern monetary mechanics. And so when I saw Bitcoin and I was introduced to it early, I realized what it was. I said, this is a finite, asset that could catch on. I didn't know it was going to catch on like it did, but a friend of mine brought it to me early and showed, he was into it. He had a good mind. He was an attorney, and he called me up. We talked about it, and I was pretty blown away by the technology. And we've been bullish on Bitcoin ever since. Now, we think long term. I have a $275,000 price target on Bitcoin by 2025.
That's a little aggressive.
Yeah, but actually it's less than many people have actually put out. When I put mine out, actually, it did feel very, very insane. But then we started seeing many other people saying 1 million or 2 million. So I was like, okay, well, I guess I'm not that crazy, But what makes Bitcoin so compelling is really just the finite nature of it. A stock can be diluted because the board of directors can decide to issue more shares. And when you issue more shares, you dilute the value for all existing shareholders. The US dollar can be diluted by introducing more money into the system, which causes the dollar to fall. The dollar, for example, was down 6% in 2020, and it's going down more again this year, more than likely. And so there's, but that doesn't exist in the algorithm for Bitcoin. And if you read the white paper understood this. The inventor of this understood this, that we need assets that cannot be inflated away at the whims of some board of directors or some policymaker. And so because there's only 21 million Bitcoin that are ever going to be mined, it makes each one of them more precious or more or more powerful in the fact that they can't be diluted in strength or in value. And so I understood that. That made a lot of sense to me. And what Dogecoin, for example, does is they actually have their supply is not finite, it's infinite. And in fact, it grows instead of shrinking right over time, instead of being deflationary, it's inflationary over time. So it's strange that's the one that's catching the world's attention. That almost seems fitting, though. It almost seems fitting that would be the one that most people would want to jump aboard, even though it's the exactly wrong type of technology. But who knows? But we have about 16 different cryptocurrencies in our portfolio. In fact, we just added 2 yesterday, and we alerted all of our members. So we have members all over the world here at Follow the Money, and we update them anytime we make a change in our own cryptocurrency portfolio. We just added 2 yesterday. Neither one of them was Doja, by the way. Mm-hmm. But we are long in that space, and we expect that there's going to be a lot more upside. But we also expect there to be wild volatility. If you look at Bitcoin over time, Christopher, you'll see that, and we've been through 3 of these now. Well, we're coming up on the 3rd. We've been through 2 already. In 2013, we saw an 8,000% spike followed by an 80% collapse. And then there was this crypto winter where everybody said Bitcoin was dead. Then we move into 2017. We have this 8,000% price increase from the low, and then followed by an 80% crash. Then, of course, the media declared Bitcoin dead. And you notice the time frame here. It's 2013, 4 years later, 2017. Now we expected, and we told our members, watch for 2021. It's going to explode because it's on a 4-year cycle due to the halving. So that's why my price target for 275,000 on Bitcoin is for 2025, which will be the next set of 4 years. Mm-hmm. So we're moving in this set of 4 years, and every 4 years, the amount of Bitcoin that go into the total circulation gets cut in half, which means it's built in. It's a built-in controlled inflationary situation, which is very attractive in a world where everything is printed out of thin air. Mm-hmm. Where shares can be issued tomorrow on this particular stock because they want more shares, or whenever the Fed can just print money out of thin air because it wants to, because it needs to. So people are coming to realize that finite assets are important. Gold and silver are similar, but they're not necessarily, they are finite ultimately, because there is only so much gold. There is only so much silver. We know that, but how much and how much we can actually have is still undetermined, but we know exactly how much Bitcoin there will be. And I think that certainty creates some sort of investing, confidence, I think. Now, over time, though, Christopher, I would say, Bitcoin is going to go up and it's going to go down and it's going to go up and it's going to go down. But when it comes to trading, I got to be honest. I got to be totally honest. If you're just a straight up trader and that's what you're doing, it's difficult to find a more volatile asset than cryptocurrencies. And that's pretty strange because it's taken me some time to realize that, over time, but just trading stocks makes a lot of sense. You can trade penny stocks if you want to. You can trade any kind of stock you want to. Trading options makes sense, and that's really powerful. Cryptocurrencies, if you're just simply a trader, it's just hard to find that volatility anywhere, that kind of volatility. And so it's risky, of course, to be trading these things. But I would say that I wouldn't shy away from cryptocurrencies if I was a trader. I would be investigating them, and I would do a lot of investigation before I even lifted a finger or typed a button to begin placing an order. Research is so key. Education is so key. That's what we focus upon here. But once you have the education, many people find that trading cryptocurrencies can actually be a pretty powerful way to soup up your returns, quicker than you can, but by saying, one of the strategies I use is to trade blue chips. And I look for I trade large positions in blue chips, but I'm looking for a 1% gain, 2% gain. So you have a large position in a nice stock that, is not going to go away tomorrow. And then just looking for a 1 or 2% gain. That's a nice strategy. That's not the only strategy. That's just one strategy. And I like that. But you can also take something very risky, like trading cryptocurrencies, and use less money, but still see really outsized gains. So I like all these asset classes. I think they're all appropriate in their own way for different people. Everybody has their own risk profile.
I hear you. And the volatility is something that can be really appealing to a trader, but also I think appeals to the gambler instinct in people as well. My brother-in-law was just texting me yesterday about how much money he made in Dogecoin. And I'm like, that's awesome, but that's not my space. Like the idea that, a month ago it was a nickel, now it's, 60 cents. By the time this airs, it may be $1. Then a month from now, it may be a nickel again. Like that idea is not something that I can sleep well at night about.
It's difficult, isn't it? It's a little strange. And yes, the gambling aspect is very, very key. I teach our folks here at followthemoney.com that that we are not gamblers. And if you are a gambler, be prepared for heartache. Trading can be gambling, but trading also can actually be very prudent speculation or hedging. So it doesn't have to be, betting the farm on something that you don't know anything about. And that's what we're seeing a lot in the crypto space, right? We're seeing people like you just mentioned who don't know anything about the underlying technology. They have no idea what they're buying, but it's going up, right? And that's all that matters, And so they have one part right. Finding a trend is key when you're trading. You want to find a trend, but you also want to find a trend in something you understand, and something that, like you said, will likely be here, 2 years from now, or 1 year from now, or tomorrow, for that matter. So yeah, I don't have a lot of kind things to say about Dogecoin, but there are many crypto projects that are very compelling and that have done fantastic returns. Bitcoin has returned, consistently more than 100% per year, every year, going back since its inception. I think 200% actually.
So do you think,
hard to find.
Sorry to interrupt you there. You just made me think. So, historically, gold and silver had been the go-to inflation trade. Do you think that pun intended has lost its luster? Because now you're not seeing the sort of gold movements that you would want to see if there were an inflationary environment, but you are seeing it in other places like NFTs and crypto and things like that. What are your thoughts there?
Yeah. Well, gold and silver are both in long-term uptrends. So they are working. They are moving in the right direction. Are they moving as quickly as Bitcoin, per se? Of course not. They're not moving that quickly. Gold and silver are part of my portfolio. So I own them as insurance against monetary and fiscal recklessness, which we have today. Now, some people are looking at gold and silver saying, why aren't they acting like Bitcoin? Why is Bitcoin going up, and going vertical, and gold and silver are just kind of grinding sideways? Well, two things I would say, and I don't think anybody has the full answer. I've heard many different answers. I've reflected upon this because gold and silver are obviously in my own portfolio, and I expect them to do well. We're in a little bit of a Goldilocks scenario right now, where everybody thinks that all of the printing of money that's happened, and all of the fiscal stimulus that has happened, and all the checks that have gone out, and all the billionaire bailouts, and all of this is going to make everything better. In reality, we haven't paid the bill yet, and in reality, we haven't had to deal with the environment where we're not getting doused with freshly printed money every single day, and interest rates are at practically zero. So we're going to have to leave this environment, and when we do, it'll become more pronounced as to where we are economically speaking. Right now, again, it's kind of a Goldilocks thing. Everything seems fine. The Fed's going to keep propping up the market. The government's going to keep handing out checks to billionaires and to anybody. And so there's kind of a sense of moral hazard, like, well, we can't lose, you might as well invest because you can't lose. Well, in that kind of environment, that can actually hamper gold and silver in some ways, as we're seeing now, because people think the economy is going to be great. So you have to have a view that the economy is not going to be great to really build a case for gold. And I think that we're living in this temporary delusion where we think everything is going to be okay. And I think that's part of the reason why gold hasn't taken off. And then the second reason, of course, is that there's an alternative in the form of Bitcoin. And Bitcoin, and this is why I was trying. I tried to explain this to many of the gold bugs that were out there, because I believe that gold is a fantastic hedge, but I also own Bitcoin. It's not like either or. So what many people don't understand is that when you read the white paper of Bitcoin, it literally is saying, it's blaming the Fed for all the money printing. It's clear that they're creating a project that is going to protect against the Fed's money printing. And so gold investors should see Bitcoin for what it is. It is a device by which a finite supply is created, a known finite supply, and that gives it an upward bias over time and an inflation protection component over time. And so gold investors should not think that Bitcoin is something that they should avoid. I think they should investigate it. I personally allocate 5% of my total investable assets to cryptocurrencies. Been doing that for years. And that's fine. If my 5% of my investable assets goes into cryptocurrencies and then they all go away, well, that's going to be sad, but I won't be living in a gutter, right? Whereas if I put all my money into, Dogecoin, or if I put all my money into, one of these cryptocurrencies and they go bad, well, that's a bad deal. And that's what many people do, Christopher. Many people don't have a clue what they're doing. They're out there and they're taking advice from social media. They're getting free advice off of asking people on social media, what should I buy, right? I mean, we're talking about high levels of dumb here, and people are going to get massively hurt in the end with all of this. So you need to have a diversified portfolio. So when I'm talking about cryptocurrencies, I'm not talking about betting the farm. I'm talking about minimal exposure that gives you exposure to this new asset class. And I think people need to be very careful. They need to study. They need to read more and spend time on social media less. I mean, I'm being quite frank with you, Christopher. There's a lot of shenanigans going on social media and things like this. And people they're just going to get hurt. And we've been through this before. We saw this in 2008. We saw it in 2000. We'll have another crash eventually. And, we'll all have to live through it. But being diversified through that crash will be a lot better than being over leveraged in some, other area in that crash.
Yeah, absolutely. Having sound money management techniques, like you're talking about 5%, across your crypto portfolio, and certainly not 5% in one place. I mean, that separates, a risk averse smart trader versus a gambler, in my opinion.
Correct.
Throwing everything all in out of the money YOLO options is not a sound strategy, and neither is throwing everything in Dogecoin, because you never know what's going to happen with that. So yeah, this is I feel like I could go a few more hours with you, Jerry, but I know I got to be respectful of your time. So Jerry, we got to have you back on again in the future to continue. And I want to make sure everyone heads on over to followthemoney.com, Follow the Money Radio podcast as well to hear more about Jerry. He's got like 300 something episodes, right? Is that what I saw?
Yeah. Coming up on 400. Yeah.
Yeah. It's, I saw something where it was like, you could actually reach out to Seth Godin, one of the marketing like gurus of our time. But he won't talk to you unless you have at least 100 episodes, because you don't know what you're doing in your first 100 episodes. Mm-hmm. But by the fact that you've got nearly 400, I think we're around 500 at this point. You don't get there accidentally, right? Success doesn't happen on accident. That's what I tell people. So Jerry, I really appreciate the time that you've given us today, going through all of this, especially talking about crypto and inflation and your history. So thank you so much for your time there.
It's been an honor. Thank you very much for the invite.
You're so welcome. And thank you guys for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode. Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.